This is Scott Becker with a special combined episode of the Becker's Healthcare Podcast and the Becker Private Equity Podcast. We're thrilled today to be joined by a brilliant leader. We're joined by Rob Greer today, the founder and CEO of SovDoc. And Rob's going to talk to us about sort of this intersection for physician entrepreneurs of healthcare and private equity and a lot of things to think about and so forth. Rob, before we get started, can you take a moment and introduce yourself, and then we'll talk about sort of the rise of private equity in healthcare, some of the key factors that physicians should think about, and a lot more. Rob, can you introduce yourself?
Yeah, absolutely. Thanks, Sky. I really appreciate it. And first off, I wanted to express my gratitude for coming on the podcast, for inviting me here, and just comment a little bit on last week or 2 weeks ago at the Becker's Ortho Conference in Chicago. It was extremely high ROI. The quality of conversations across vendors and potential clients for us was phenomenal. So I appreciate that. And at that, during that conference, we were interfacing a bit on panels talking about private equity and AI, and that's what SovDoc stands for. So just a high level, I worked in healthcare investment banking and then private equity for most of my career. I was intimately involved with the acquisition, growth, and disposition of various healthcare companies, including doctor practices. And so now what I'm doing with SovDoc is essentially productizing what I did in healthcare private equity, applying the same valuation frameworks and growth frameworks to private doctor practices, all in the spirit of helping them grow their EBITDA and profitability and ultimately explore strategic outcomes, whether that's a sale to private equity, minority, majority, sale to a health system, or things of that nature. SovDoc itself stands for Sovereign Doctor. And so that is synonymous with physician entrepreneur. We're just putting a different definition of it. And the whole ethos is that we're entering a new era in healthcare and specifically within the doctor practice with an increased dominance of private equity, as well as AI and digitization, which are very much in the early innings. But happy to pause there and take the conversation in any direction that you'd like to.
No, thank you so much, Rob. Congratulations. Talk to us a little bit about the rise of private equity in healthcare and how that's changed the landscape for physician entrepreneurs, and does it present some opportunities for physician entrepreneurs?
Yeah, I mean, that's a great question and something that I think about on a daily basis. I think most people understand what private equity is, but for a lot of doctors, it's kind of this opaque black box. And so part of what we're doing is helping increase the fluency and vocabulary of doctors when it comes to finance, business, and by extension, private equity. Private equity is not a new feature in the healthcare landscape and doctor practice landscape, but my base case here is that it's going to play an increasingly prominent role within that ecosystem as well, particularly if there is a change of administration in November, which seems like is a possibility. And so it's related to, over the years, you're aware of this, Scott, but the percentage of physicians that are entrepreneurs in private practice, not employed by health systems or private equity firms, has fallen pretty precipitously. And so we want to empower those, roughly 1/3 of doctors to kind of stay in private practice and, remove the administrative burden specifically on the financial side. But overall, I think, private equity is playing a really significant role. And the percentage of doctors that are employed by private equity, I'd say, is going to continue to increase pretty significantly over the next 3 to 5 years. But also curious to hear your perspectives on that.
Rob, let me ask you this question. A lot of physicians, particularly those that have stayed independent, many of those are hesitant about external partnerships. How does a physician, we've seen in the primary care world a huge amount of already aligned or employed or something. In the specialty world, it's a much greater mix, with there still being a lot of independence amongst GI, ophthalmology, orthopedics, pain management, and other specialties. How should physicians think about external partnerships? How can they evaluate whether a private equity deal makes sense for them and aligns with their long-term goals and what they want to do? How should physicians think about those things?
Yeah, absolutely. And that's part of what we're trying to do at SovDoc, kind of help translate that a little bit. I think the right private equity firms will understand and take a long-term view about the importance and criticality of patient care. At the end of the day, a practice is fundamentally a business, and as a result, a patient is a customer. And the right private equity firm will recognize that and not sacrifice patient care to boost EBITDA. I think there are, of course, extremely big blow-ups of private equity firms within healthcare that folks like Elizabeth Warren are talking about extensively. But anecdotally speaking, at my firm and then other middle market PE firms that I'm aware of, I could cite several examples for every negative example. At the end of the day, if a private equity firm is sacrificing patient care, that private equity firm is not going to be making good investments in the healthcare system for very long. But I would say the physician should be operating under the assumption that it's a seller's market and that there's plenty of private equity that is interested in their practice. It's just about fostering the right competitive dynamic when they do want to entertain that. At the end of the day, there's several different permutations of what a private equity deal could look like. It could be minority, 30s, 40s, 50s physician that is, trying to scale the practice, whether that be new locations, ASC enabling themselves, new surgeons, new specialties. Or it could be, an elderly surgeon, 60s, 70s, that is seeking a way to transition into retirement, but also convert some of the equity value of their practice that they've spent, decades building and converting that into cash. And so I think, the right private equity firm exists out there. It's just a matter of finding one that you're philosophically aligned with and ones that you're prepared to be in business with for at least 3 to 5 years.
No, and Rob, talk about that for a second, because you're absolutely right. With the Steward Healthcare situation, with some other situations, private equity is taken to the chin from some of the politicians. And you and I all know different private equity funds are much more focused on leveraging things up than others, and others are more careful about how much they leverage things up. And it's that situation where they've over leveraged and margins have softened that things have gotten tougher. But for a lot of private equity sponsored companies, they run just very fine and run well, and they're very focused on the patient and patient care, and not trying to short expenses every place. And they're running a business like anybody else. Talk about a little bit that perspective, and how do physicians assess whether a private equity fund will be a good operator, a good partner, or ultimately the opposite, be something that, like, oh my goodness, it's going to make it hard to do business.
Yeah, I mean, addressing the first question, for example, I think when there's a payer dynamic at the practice, as is the case with a lot of them that are not in discretionary elective specialties, there's deflationary revenue reimbursement and inflationary costs. And that's part of the contribution to what's making it so difficult for physician entrepreneurs to stay in practice. As it pertains to aesthetics and discretionary specialties, which is something that SovDoc focuses on, among others, a lot of the private equity firms got into trouble by levering up the practices in a big way in about 2019, 2020. And ultimately, during 2021, COVID, there's a significant trough in those elective procedures. Overall, I think private equity demand for aesthetics, med spa, consumerization of medicine is pretty much a tsunami right now, and I don't think that's going to change anytime soon. But I would say levering up a doctor practice in today's environment, especially where rates are, is probably not an advisable strategy. And the second question, Scott, can you remind me of that one?
Yes, no. How do you make sure you're working with a good operator,
Sure.
versus a challenging operator? How do you sort of a good private equity fund versus a bad one that's not going to be so pushing the envelope on leverage that you could end up fragile? How do you make those assessments?
Yeah, I think it really comes down to the precedent transactions within the private equity firm's portfolio. So do they have an undeniable track record of success within your specialty and within PPMs? I think if they're able to cite several examples, I think that would be extremely beneficial, and that should kind of increase your trust that you're partnering with the right operator. At the end of the day, a private equity firm is kind of offering two main things. One, they're providing capital to fund expansion and cash you out a little bit as well in the process, but they're also offering operational experience that is going to allow the physicians to focus less on the administrative back end if they so choose, and focus more on patient care, which I think a lot of the physicians want to do, and production, obviously, which is helpful for the revenue outcomes and ultimately the EBITDA outcomes.
Thank you. And what advice do you give physician entrepreneurs today about managing their practices for success, about navigating these issues for success? How do you look at some of those issues?
Yeah, so at SovDoc, what we're recommending is, if you're considering a private equity transaction or any other capital raise, don't rush into that. You want to be having those negotiations and those conversations from a position of strength. And how you develop that strength is by actively preparing the practice for that strategic outcome months and years in advance. And so in some ways, SovDoc is an evolution of the investment banking model where we're actively helping you maximize your EBITDA and ultimately your exit multiple in the years in advance of the sale. And so taking a more proactive approach. And also, I would say, as a physician entrepreneur, it pays off to kind of put your head down and stay in private practice because ultimately, as a former private equity investor and, an individual that, knows a couple hundred doctors at this point, the common denominator of the most successful doctors, at least from a business standpoint, is fluency in business and fluency in private equity. And so the more that you can upskill yourself and upskill your knowledge, I think the better. I'm of the position that they should be teaching business classes in medical school, and maybe they'll do that at some point.
Could not agree more. And Rob, tell us where people could learn more about you and SovDoc. Where could people learn more?
Yeah, absolutely. So my email is rob@sovdoc.com. So SOVDOC.com. Happy to have a conversation. We also have a new ebook that came out that I was actually passing along at the conference, Scott. It's Private Equity 101 for doctors. And so hopefully that is a step in the direction of kind of upskilling you. And if you're so interested after reading that, I'm happy to have a call and, even if it's exploratory, just see if we might be the right fit for your practice and kind of continue the conversation from there.
Rob, I want to thank you for joining us today on the Becker Private Equity and the Becker's Healthcare Conference. It's always a pleasure to visit with you and SovDoc. Thank you so much for joining us.
Thank you, Scott. I really appreciate it. And, looking forward to future conferences. I'm confident that the ROI for the booth that I purchased at Becker's Ortho is going to be extremely valuable. And I would love for you to come on the SovDoc podcast when the busy schedule that you have frees up at some point over the next couple of weeks and months.
We'd always love to do it. Thank you so much for joining us today. Thank you, Rob.
Yeah, thank you, Scott.